Good morning and welcome to this week's PFL podcast. I'm Curtis Chandler and we've got a lot to report on. This week we're tracking revised UPNS merger application, the Bridger pipeline permit, the UAE exiting from OPEC, and another major SPR drawdown. Stocks closed mixed on Friday of last week, but higher week over week. See PFL's rail report for further details. In overnight trading, Dow futures traded lower and are expected to open down 251 points from Friday's close. WTI closed lower on Friday of last week and was down $3.13 to settle at $101.94, but was up $7.54 week over week. WTI is poised to open at $105.79, up $3.85 per barrel from Friday's close. The inventory picture turned decisively bearish last week, with total commercial petroleum stocks down 17 million barrels week over week. Distillates fell by 4.5 million barrels, now sit at 11% below the 5-year average for this time of year. U.S. crude export surged to 6.4 million barrels per day. See PFL's rail report for all PFL or all petroleum inventory levels. On rails, North American weekly rail volumes were up 1.38% versus the same week last year. 6 of 11 of AR's major traffic categories posted year-over-year increases. Motor vehicles and parts led the way, up 14.9 cents, and forest products was down 15.01%. North American rig count was down 4 rigs week over week. The U.S. has 547 active rigs. Canada has 123 active rigs. Year over year, we are down collectively 34 rigs. Now, to the stories we are watching out there, or were watching out there for you last week. Union Pacific and Norfolk Southern refiled their $85 billion merger application to the SDP on Thursday of last week, 4 months after the board rejected the original. BN, CP, the Teamsters, and a broad coalition of shippers are publicly opposing it, and the SDP won't likely make a decision for 2027. CPFL's report for what this means for tank car owners running long haul through eastern corridors. President Trump signed the cross-border permit for Bridger pipeline on Thursday of last week, a 647-mile pipeline that's going to add 550,000 barrels a day in Montana. The permit is a milestone, not a green light. A realistic in-service date is 2030, with material on the backlog. The volumes will flow into the next decade. The United Arab Emirates exited OPEC on Friday of last week, ending a 59-year membership and removing meaningful spare capacity during disruptive supply shocks like in the 70s. Hormuz remains effectively closed. The earliest credible date for a reopening is July, according to sources. The DOE issued another emergency RFP on Thursday of last week for up to 92.5 million barrels from the SPR, building on the roughly 90 million barrels already awarded under President Trump coordinated 400 million drawdown with EU nations. Bottom line, we're pulling hard from storage right now. Shell announced its $22 billion acquisition of ARC Resources last Monday, the largest Canadian energy deal in years. The deal moves Shell to the second largest monetary producer and feeds LNG Canada's strategy for natural gas. Tank cars, we're going to be short. Today's report has more on California's refined fuels crunch. LCFS and RINs prices are rising. On top of it, 17% of the state's refinery capacity was lost in the last year, with Phillips 66 and Valero shutting down 2 refineries. At PFL, we offer storage, leasing, subleasing, cleaning, repair, flaring, scrapping, nitrogen generation, and transloading services. If you found today's report interesting and useful, please share with a friend and colleague and tell them to shoot us an email and we'll put them on our distribution list. Thanks for listening to today's report. Please read the report. In today's report, we have 20 graphs and charts for your viewing pleasure. Could be a record. I don't know, folks. We do it all for you, and it's free. We hope you have a great, safe week out there, and be careful.